Good morning, everybody. Doing some live streaming of the stock market. I was just looking at Target. It's had a pretty good drop recently, and looks like it's trying to make a recovery. Let's look at a longer time frame. So I usually just watch the closing price because the candles are kind of just add noise to the chart. And we're looking at the week and the month, and we're up on the week and we're down on the month. I have two moving averages just for reference. One is the 2, it's the green, and the white one is the 4. It's a 4 SMA and a 2 SMA. So let's look at a shorter time frame, and now we've got the 10 and the 15, and we can see we are above the 2 simple moving average on both charts. Upward direction stock. The 30 and the 60, we have moves up. The 90 and the 120, we have moves up. So every time frame so far has been up. And if we look at the daily, we are inside between yesterday's closing price and the previous day, which I believe is Monday. And I don't recommend anybody entering. You never chase stock. Here's a 5-minute chart, and we got candles for people that are familiar with candles, and just closing prices on the left. And I also put a little white dot on the candle so you can see the closing price. I mean, if you're comfortable chasing candles, go for it, but this is not something I would do. And we don't have any long-term continuity on the 5 at this point. So yearly and quarterly. Yearly, we've been down 1, 2, 3, 4 years. We're down. Is this a long-term buy? Maybe soon. Right now, the quarter's pointing down and the year is pointing down. Week, month. Month is down. The week just turned around. But we haven't had enough move on this to consider a turnaround. Daily. Let's see, we had a pretty good move here. I like the 4-hour chart. So you can see what happened here. We had the drop after earnings. And now the 4-hour, we're in positive territory. But we have a previous high of 130.75. I've been watching Boeing also. And we have the daily. This is a stock that's moved down quite a bit. And as we know, with stocks like Meta and Netflix, eventually they do hit the bottom. It's a company that could be something someday. And the best time to buy is at the bottom. How do you determine the bottom? Well, let's look at a yearly chart. This is quarter and year. All right, so we've been down. Let's mark it up here. The high ever has been 325. We're currently at 150. So that means we can move 100%. That's the potential. Year down quarter is trying to at least close even. We need to be 150.70 to get over that quarter. Be quarter, actually it's not quarter up, it's just inside quarter. And if we look, this is the weekly. We have for SMA, we went week up. This is the third day of the week. Look at the month. We are still an inside month. You haven't gone month up. Once you go month up, it's got a little more momentum. And we have the 4 hour on the left, the daily on the right. The daily and the 4 hour are below the 4 SMA, which directionally we have conflict. We have the 4 rising on the daily. We have the 4 going sideways on the 4 hour. The 2 SMA is down. 2 SMA is down. So I use them for directional. So that means the stock is going down in price. So do you buy long when the price is going down? I wouldn't do that myself. And let's look a little tighter for the 90 and the 120. The 90 and the 120, down directionality. You buy? No, you wait until it turns around. You don't trade on emotion. You look at the facts. All right, so now we have the 30 did a reversal. But the simple moving average on the 4 is still pointing down. Is the stock going up? I wouldn't bet on it. All right, 15. And then the 15 are up. The 4 has changed direction. 4 is going sideways on the 15 and it's going north on the 10. And we look at the 5, and if you're used to looking at candles, this tells a different story, doesn't it? So on the 5-minute chart, since 9:30, we don't have any continuity. I define continuity as 3 periods closing in the same direction, either higher or lower. And there's not 3 closing periods that are in the same direction. And this is the 5-minute. Let's take this out a little longer. And what do we see here? We see chaos. We don't see any organized buying. So this is a stock. You cannot guarantee but one time frame, one 5-minute move is the only guarantee you have. So it's not something that I would play at this point. I'm going to show you something I saw today. Which is Berkshire Hathaway. And we're going to have a different look here. So this is the 5-minute chart this morning on Berkshire Hathaway. And we have from 3 o'clock yesterday to today. And this was a solid move on the 5-minute. 10 and 15, solid move. Do you buy now? Well, it's at exhaustion. It has a new high. But at 9:30 this morning, this would have been a good chart. So this is the 30 and 1 hour. This is the 90 and the 2 hour. This is the 4 hour and the daily. What do we see on the longer term? The 4 SMA has been going up for several days. This is the week and the month. And this is the great one, the year and the quarter. So if you had entered into Berkshire Hathaway back in 2022, after we had that correction in October, for $265, you will see that the closing price of every quarter was just above or right at the 2 simple moving average. And you see this got below because we had this guy just get carried away. So there was some correction there. And we're at a good point even here on this quarter. If we look at the yearly, we have some pull away from the 2. The price likes to live near the 2, so I expect some correction to get back down to this point where it likes to be. And you can see over the period of 10 years since 2010, here we got the 2007, 2008 financial debacle. And for the first time, the year closed out below the 4 simple moving average, went sideways, got above, and then at that point from 2011 all the way to today, every year, the price averaged up. And what does this tell you? Don't get scared on what happens from day to day. From quarter to quarter, there's some major moves. This quarter was 351, and 2 quarters later, you're at 265. It's $100 a share, lost 30%. If you in long term and you can stand a 30% drop, stay in. Eventually, you'll get out of it. It took several years. Well, it took this is not the 2008. This is the 2022 drop. It took several quarters, and you're back in the money. If you're retired and you're not contributing anymore, I would just watch when the price got close to the 4 simple moving average on the quarters, or we can look at the month. It's a definite. So on the month, we can see that correction where the month peaked out at 352, and the first quarter was up, and then that's when we had the drop. And then you see here it got below the quarter, but that one doesn't matter. What did the next quarter do? That's the one that counts. Now we have continuity to the downside. All right, and then we took a dip. Then we tried to go up. We didn't break the 4 simple moving average, and then we continued down. But if you notice back here, we got to the 4 simple moving average. We went above the 4, below the 4, above the 4, below the 4. There was no continuity. So unless I see the next move, take it down and look at the shorter time frames to see what continuity is going on there, that would be the way to look at that. If we were to look back at 08, That's way back here. And let's zoom in. Oh, wait, it peaked out. We're looking at months, so longer time frame, $94. It went all the way to $50. It lost 50% of its value. That is a rough hit. Do you see any signals looking at just the end of each month? It's a lot easier to get rid of the candles and see how the month or the week or the day closes out. I'm just sliding over here with 2012, 2013. Berkshire Hathaway is a really good stock to hold long term, but it does correct like all the other stocks. Here, 2015, 2016, we went in 149 and it went all the way down to 128. That's not so bad. And here's COVID. So if you ever see a drop like this, you definitely want to take advantage. Once the monthly, once the quarterly, start getting on top of the 4 simple moving average, because now you're in positive territory. And you see simple moving average is trending up, 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 versus down, 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 down. So you kind of, somebody that pays attention to stock price is not going to make good investments. You have to look at the average over time. The stock market's all about aggregation of price over time. The shorter the time frame, the more noise, the more adjustments, the more people are taking profit and entering the market and trading positions. But unless you look at a quarterly or yearly chart, you have no idea. To give you a good example, Ford has been around for 125 years, and their stock, looking at yearly charts, let's see, why is that not changing? Come on, let's change here. There we go. There we go. Now let's look at Ford. This is a yearly chart of Ford. So if we invested in 2005, if we invested $11.52, the price of that stock today would be $11.57. So why do people invest in Ford if the price hasn't changed in 20 years? People invest in Ford because they're looking for dividends. They're looking for the return or a safe place to keep their money while they make a dividend return every year. So if you have $20 million and you want to make 5%, and that's what the dividend is, you'll end up with a 5% yearly dividend, and people live on that. They want something safe. The stock market itself, most of the time, is a little squirrely, but even if Ford price goes down, which it did in 2008, the dividend is still paid. Now, once the dividend is revoked, now you have a different story. But let's go ahead and look back at Boeing. And let's see what they're doing. All right, so longer time frames are dropping. Let's go to a 5-minute chart, and it's starting to find a direction. I never chase stocks, so I will never enter a position unless it's near the 4 simple moving average on the longer time frames, because those are a little bit stronger. and less volatility. And we are still inside day, so it might not even go anywhere. Here's our daily chart right here, and Monday we ended there, Tuesday we ended there, and today we are in the middle. Center a little better. All right, we have two different looks here. We have candles, and we have just a line. The line, you cannot see volatility. You're only looking at the closing price. Here we have the closing price of Boeing has been ending above the 2 SMA, and you can see it here on the candles. We have this reversal, and those people that follow the strat, we have large green candle, we have a red candle down, but it never took the green out. Then we have an inside candle, which is pretty powerful move, but you cannot wait. You cannot buy this candle. You have to wait for the next one. We have a green, 2 up, 2 up, and now we have an inside candle. Well, that's still a 2 up. So this might be an opportunity to enter when the price gets closer to the 4 SMA. If the candle breaks the bottom of the previous green, that means the traders took it up and they took it down. And outside bars, the next candle determines what's going to happen. One day before the holiday, so it's a little sketchy on what's going on. A lot of people took the week off. A lot of people are not trading. Let's look at the 4 hour. 4 hour is up. So people that are in a stock, if you had gotten in Boeing at 150, looking at this 2 indicators, the 2 simple moving average and the 4, and I would watch this because you got in below it. So what's your exit point? What is that telling you? The 4 is moving up. Would you get out while the longer terms are still moving up? We have, basically a correction here. Got below the 4, but yet look at the strong upward movement here. We had a high here on Monday. A lot of people probably got scared. The market opened, it dropped. But did it drop out of range? No, there was such a strong movement for 2 days. This is a correction. So when you're trading, looking at the exact price will get you in trouble. And it's like Warren Buffett says, you don't look at the price of a stock, you look at what the company is doing. And this longer white line is what's going on. This is what's happening long term. This is a daily chart, so we're looking at a couple weeks worth of work. Every day it's up, and we notice that the 2 simple moving average never crosses and terminates below the 4. So what is that telling you? Here we have some, can't make up their mind. We're going to take it up, and we have a higher high, we have a lower low. We don't have the higher high here, and then it just goes down 1, 2, 3, 4 days. And then the day goes above the 2, and then we have several days high. It tests below the 4, and then takes off. Tested below the 4 while the 4 is up. And if we look at the month, where are we at here? This is the month and week. All right. Look where the week ended up last week. It ended up on the 4 simple moving average. Look at here. Look at this 2 weeks in a row. Sat on the 4 simple moving average. I've discovered that the 4 is your pivot point of buy or sell. This is indecisive. Oh, they tried to take it down. Where did the next week go? Above the 4, but barely, barely, barely. And then they take it down. There was no buyers to take it any further. The sellers got spooked, took it down, and then all the buying started happening at 140. And then we have 2 weeks up in a row.
11 a.m.
Looks like I got to do some centering on my charts here. I had mentioned Boeing was an inside day, 4-hour and daily. So we do have some hesitant here because they took it up, they took it down, and they're meet in the middle. Some people don't like to trade inside days because directionality is not clear, but on the daily chart, we're still moving up on the 4 simple moving average. If we close today below the 4 simple moving average, that would be something to watch on Friday since the market's closed on Thanksgiving. Let's look at the week and the month again. We're still week up. So if you got in at $140, you have a big buffer. Where's your magnitude? That's the question. So you have to analyze where is magnitude. So right now, I see here, we have 3 higher highs, and we have 3 lower lows. So theoretically, this could go to 259 or higher if you use the magnitude concept. And let's change this to candles. A lot of people used to looking at candles, and I still have the closing price on there. It appears the free fall has stopped. Eventually, companies bottom out. Especially Boeing's been around so long, they produce a product everybody wants. They just need to get their problem straightened out, and you want to be in at the cheapest price. We can see here, 120 is a possibility. And we did not hit the 140 test point here. When do you get out of a trade? That's always a big question. You have the 4 simple moving average, and the 2 kind of gives you the direction of what's going on. So there's no guessing. It's black and white. If you bought below the 4 and it's going up, you stay in until at least one of the shorter time frames are going sideways. It doesn't matter what stock. It could be Bitcoin. You know, what's your time frame for staying in the market? Are you a day trader? Because then you'll be looking at shorter time frames. You know, or are you a long-term investor? You'd be looking at longer time frames. Long-time investors, you should never even be looking at a daily chart, because that will get you scared or get you in trouble, because it looks like huge moves. The only thing you want to see is what's happening maybe weekly, monthly, and quarterly, and yearly. You know, some people just look at the yearly. As long as we're going year up, they don't care. So you have to make that decision. But just having these 2 indicators on your chart, you know what direction you're going. So let's pick Apple. Everybody knows Apple. Okay, let's look at Apple on yearly. Wow, since 05, only 1 year has the price dropped below the 4 simple moving average. And based on today's money and where the stock is, you could have bought that for $2.97. You could have stayed in the market, and the price never ended the year below the 4 simple moving average. This is a lot simpler than a lot of these people online are talking about. I don't even understand what they're selling. Anyway, it's real simple. So you see here in 2019, this is 1919, and then 20, and 20. I'm getting my years screwed up. 122, 2019, 2019. You see how the 2 is getting a long distance from the 4. That kind of, you don't see it any other place except for in 08, it got a long distance from the 4. The big investment firms don't like when they have this distance, so now you see a correction. Where did the correction go? It went all the way to the 4, the year closed out right at that point, and then it took off again. Looking at it this way, so here we have 2019, looking at quarters, we have more resolution. So this is the point where everybody was freaking out. We had a 25% correction. We're at 130 there, and we're at 174 there. And you could have gotten out here and bought oil, and you would have been up, because if you look at oil during that same period, let's do ExxonMobil. While Apple was going down, oil was going up. You know, unless you have a market crash like 2008, they just move the money somewhere else. 2008, the people that make the market were in financial hot seat. They got in trouble with default swaps and they needed cash, so they pulled a ton of liquidity out of the market. But normally that doesn't happen. It happened in 2000 and 1929, but normally they just move it to another stock. And see, oil went, and this is ExxonMobil in 2021, it was at $34, and now it's at 118. So if you just looked at a monthly or quarterly probably is better for long-term investing, and you bought when the price of oil or ExxonMobil got above the 4 simple moving average, you could have stayed in it until the 4 started going sideways. No candles to confuse you. Candles are noise. So we're having trouble breaking that high. So this is in exhaustion. There's no more people buying. They're not dropping the price. They're not lowering the price. They're supporting it. So something to keep an eye on. When you're at this point, you look at shorter frame to see what happens. Are they making a move? Are they trying to get out of it? This is too short. Weekly, monthly, and the past few months, oil's going sideways. Nothing to see here. And this is Apple. So we have Apple from looking at months. If we put the candles on, same chart. Harder to tell what's going on. I think the investment groups like telling you about candles because it blurs the line. If you want to do trading and use candles for entry, that's fine, but you cannot analyze clearly what's going on looking at candles as opposed to just having a line. It's one way to look at it. Or I just simplified less is better. I used area, and to me, the daily price is not critical. You see we have no continuity or follow through here. We went one period down, one period sideways, one period up, one period sideways. Hit the 4 simple moving average. We went down one, followed through. The price bottomed out at the same place and then took off, a little correction here, and we're here. This is a fear. This is 2 months of down. This is fear. This is greed. This is fear. This is greed. Any chance of Apple failing? Well, you have to look at long term. What do we have here? That looks pretty strong. We see the quarters, up, down, hit the above the quarter, try it again, hit the same price, hit below the quarter, and then finally broke out. And we look at the previous quarters, and we have the 2019 correction here, which is, that's COVID. Prior to COVID, it just got out of hand. It just got too far from the 4 simple moving average, corrected. You just have to make a choice, where you're going to be. Some people will get out when it hits this point. You say, hey, I'll take the profit, but you got to be careful. You don't watch the comeback, you will miss this big move, which is, if you think about it, went from $47 all the way to $231. So if you're going to pull money out of the market, you better pay attention. What's the best charts to look at? Depends on what your objective is. This is just showing some samples. What I look at, here's the 22, 23 correction, went from 176 to 130. Can you live with that? You have to make those decisions. Everybody's saying Tesla's collapsing. Let's look at Tesla. Tesla's interesting. So if we look at Tesla on the year, here we got Tesla. Oh, that doesn't look so volatile, does it? Oh no, Tesla's all over. So, we have here, 2013, we're going sideways. Oh, it hit the 4 simple moving average, and look what happened. Got above the 2 again. Oh, it's operating normally, right? And then we hit the 2 here, didn't hit the 4, shot up. What happens when the stock gets too far from the 4? Hell, it went another year up. Oh, shoot, we've moved too fast. Let's go back down here. Now we have 2 years. 1 year, it ended up on the 4, stayed there. The next year, which is 2024, we have this movement here. So if you were in this long term, this would have probably scared you coming down here. Let's look at a monthly. Oh, look at that. It stayed right with the 2 simple moving average on the quarterly. Never got below the 4. So maybe this is a point to get out. The high was 359. And then it went below the 4, which is 295. $60 a share, but that's a pretty hard move. Let's zoom in. That's a pretty hard move. I mean, that, especially as fast as it moved, maybe that's time to get out. And you have to make that decision. You're the one that knows your financial situation. But when you put a 4 simple moving average in conjunction with the 2, now you have directionality. So you have 1, 2, 3, 4 quarters. This might be a good entry point. But it didn't move. What do you notice about the 4? It's going sideways. It's not going up. It's going up here. But it's a lagging indicator, so you have to go with the shorter time frames. You got to see what's the weekly doing. These are all lagging. Weekly. You got 1, 2, 3, 4, 5 down, 1 up. It's bouncing. Got a higher low, a higher low. Where would be the entry point? On a correction, you never buy out here. That's how people get screwed up. They buy at the high and they sell at the low because they got scared. They lost all this money. So you wait for a pullback. You wait for a move. You have this move here, a week up. You know, what's going on shorter time frame. And then if you got in at 226, now it's at 321. If it doesn't work when you get in, you could always get out. You're below the 4. What's the shorter time frames doing? That's what you got to watch. Simple charts, less confusion, higher visibility, continuity of multiple time frames. Let's look at the 15. We're going up. 10 and 15. We're going up. 90 and 120. We're going down on the 90, up on the 120. The 4-hour and daily, we're going down. We're going up on the week and the month. You got to figure out probability. We have an inside week. Inside week right here. Where's the next move? Well, it stopped at the 4 simple moving average. I don't even think you could day trade this without getting chopped up because the next move is what everybody's waiting for. If you were to enter, you try to enter at the beginning of the period because if it doesn't go your way, you can get out. You say, hey, I think this is going up, and you get in and you see it's going down and it's verified on the shorter time frame, just get out. Keep your money, wait for the opportunity to get back in. This is not investment advice. This is learning how to read time aggregating, price aggregating over time. I'm teaching you price aggregation over time and how to recognize direction. This could be, Al's garage. It doesn't matter. It all works the same. What's the 4 simple moving average doing on multiple charts? How far is the stock price from the 2? Because a lot of times that'll indicate your next move. These are all lagging indicators. So to get real-time indicators, let's go to a 2-minute chart. This is 2 minutes, pretty much real time. What do you got going on there? You've got a 4 bouncing around. Let's go to a 3-minute. Is that investment? Look what happens here. You've got, this is 4. You're crossing the 4, up, down, up, down, up, down. The price doesn't know. This is price discovery. You can't make money in price discovery. Let's look at a 5-minute chart. This is giving you more information. The price is closing above the 4. If the price started closing below the 4 and you're day trading, do you stay in? I wouldn't. But you have to ask that question yourself. Look at the high-low change. This is probably going to move. And confirmation. Time is everything. You notice I have the time here on the chart. So at 11:30, the 30-minute guys are going to change their position. Are they going to go up or are they going to go down? That is the question. Yeah, if you're going to enter this, that would be a great place. You'd enter before the market moves. 331.35. And what's your risk there? If it comes back on you, very little. I mean, your risk, you'd want to sell if you got below this guy right here. You're expecting it to move. You get in. If it doesn't move, you get out. So your biggest thing you got to pay attention is probability. Day down, week down. Month up, quarter up, year up. 4 hour way down. Is this a turnaround? Well, 3 is above the 4, the 5 is above the 4. The 10-minute looks good. We just have continuity with the 10, 30. The 30 and the 1 hour, not very strong. So if you do play that, just keep an eye on the longer time frames. Make sure they hold their direction. Don't look at one chart. You can't see the big picture. You got to look at multiple charts. What is going on long term? Let's look back at the 5. Remember I said, oh, it looks like it's going to run, but look what we have here. We had it reach out, and it kind of pulled back. Why did it pull back? Because the longer time frames were dragging it down. The longer time frames can kill you or they can help you. Never trade without looking at longer time frames. And depending on how long you're planning on spending, trading, is it for the day, is it for the week, will determine how far back you got to go. So we had a correction on the 5. We see we came back to the 4. We're above. That's an inverted hammer, which indicates they took it up, took it back down, took it back out. There is a hammer on the 3. Let's see, where are we on here? We also coming up on 11:30. See what's going to go. So I just got in, you can see. Okay, I'm going to get out. It's not going my way. Or get out. All right. See the 2 minute? I wasn't paying attention to the 2 minute. So let's go back to the shorter time frame. And you can see we didn't hold up. Trying to mess with charts here, and that was a sacrificial trade just to show you that follow through is important. Since it didn't take off, I got out. Let's look at, you can see, let's see what it was 100 shares. And so it was what, 50 cents. When the price dropped 50 cents, I was out. Don't pray or hope, you know, what's going to go on here. All right, so we're looking at a 2-minute chart. We don't have continuity. Going sideways on the 4. Yeah, if I stayed in, it would have gone. So let's look at something here. Let's look at a 3-minute. Notice the 3-minute, the closing price. Look at the closing price never dropped. Oh, I didn't even follow my own rules. This is a game of rules, not emotions. Seeing a pattern here. The reason I got out is because we're down for the day. We are down. I trust the longer time frames over the shorter time frames. And you can see what I mean here. What are we seeing there? We still don't have a closing price below the 4. We do have one on the 3. There's no follow through there. The 2 simple moving averages below the 4, so we don't have continuity within the one chart. And if we look at the closing price on the 6 previous closes, what do we have? We don't have resolution. On the 15 we do. 30 and 60 we do. So long term, we're looking good. So we tested below the 4, went up. So now we have, you're doing the strat, which is a Rob Smith technique. On the 3-minute chart, we have a 3 bar. A 3, basically you take it up, you take it down. So we straddled the opening closing price of the previous period. The 5 looking like 5 is still up, 5 is holding. This is kind of a creeping scenario that eventually probably collapse because it is a down day and probably not enough support. Tesla is a difficult stock to day trade because it is volatile and you have to trust the closing price. So here we have the 5. If we trusted the closing price since 11 o'clock, we would have been good. Three minutes, not so strong. 3-minute, we have some volatility. And the 2-minute, for sure. But if you had gotten in this morning at 3:27, every 10-minute period from that point closed higher than the previous, and it never got below the 4. So there was really, if you're playing this long term and you got in down here, there was no reason for you to bail out. Because even on the 30 and the 60, you have up, 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 straight line. Less is better. It's 11:33. We have a new 30-minute chart. We have a new 15-minute chart. Old 10-minute. This is probably going to correct because it's going up slow. And we have a new 5-minute chart. Ooh, Target did something interesting. So Target had some bad news earlier. Let's look at Target quarter and year. So we've been down 1, 2, 3, 4 years. High of 231, bottom of 129.45 today. If we look at quarters, there we are. It's all over the place. Is this a good long-term investment? No. Is this something to watch? Yeah. If you had bought at 239 and held on after all this stuff going on, and you're managing your own portfolio, you would basically have the same price that the stock was in July of 2020. So basically, it's gone nowhere in 4 years, almost 5 years, 4.5 years. Is it a clear what's going on with the price versus time? So the simple moving average gives you time aggregating with the price aggregating over that time. And we can see right here, having a hiccup, and then all of a sudden the price got below the simple moving average, and look what happened, it's pointing down. Why would you, unless you're living in it like a house, hold on to something? You have to ask yourself the question, when you see it's clearly on the quarters going down, and even on the year, look what happened to the simple moving average on the 2. You got below the 2. So you have to rethink, especially if this is a major part of your portfolio. So let's look at the 1-hour chart. Here we got some interesting stuff happening. So 30 minutes, 30-minute. So here's 2 days. So if you were day trading this, you would be looking at least the 1-hour chart, 30-minute chart, 15-minute chart. Let's look at the 10 and 15. So if we had gotten in here and this morning at 9:30, oh, we see this drop right here. The price got 10-minute, got above the 4, shot up, only one period, no follow through. What happens when there's no follow through? No follow through, that means there's no continuity in the same direction. It went down. Okay, so they took it up, they took it down. Then they took it to the 2 and they said they wait, and they took it above the 4, and then they said, oh, I don't know, they pulled back. So you could have gotten in on this pullback here. And what happened after that? Boom, 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 boom. So 4, 10, 20, 30, 40, 50 minutes, the price went from 128.11 to almost 130. That's a $2 move. Do you see any chance of dropping during that? No, as the price was every period, what's the new 10-minute? What does it do? It ended there, next 10-minute, ended there, next 10-minute, ended there. With the 5-minute. All right, so here you see the correction at 9 o'clock. Lots of stuff going on, but look where the closing period is. Forget about the length of the bars, but the volatility scares people. You only have one closing period below the 4, and then they ran out of oomph. And then here it drops down, and right here, look at the closing price on the 5-minute chart. You could have watched the 5-minute chart all the way up. The price never closed below the 4 simple moving average. And you can see the same thing going here. And if we look at this haphazard stuff here. No direction hasn't been defined. Several days. And there's the 5-minute. But you notice a lot of people say, oh, it ran far, I'm going to short it now. Why would you short a stock that is up 2.25%? Obviously no sellers. So you'll just have made a mistake. You see a lot of people do options. Oh, all right, it went run here, it's going to back off. But you can't even make that decision unless you look at the 4-hour and the daily. All right, what do you got? You got up on the 4, up on the daily, up on the weekly. Why would you short it? As people think they can feel the market. I feel this is what's going to happen. You have to look at evidence. The shorter time frames give you real time. That's real time. In the scheme of things, it is delayed, but it's only delayed about 2 minutes. Longer time frame. Would I enter at this point? No, it's too far away from the 4. Always enter near the 4 in the longer time frames, and there's the least amount of volatility there and the least amount of risk. The highest amount of risk, as you can see on this 4-hour, is when it's really far from the 4. See that distance there? Really get far from the 4, what happens? Direction can change. Really far from the 4, direction can change. Really close to the 4, boom, direction is determined. Look at the shorter time frames. And if we look at the 4, so let's look at the 90, looks good. Say if we're going to play the 60-minute, we could have gotten in 60-minute. There, we could have gotten in at 126.47, right? And now we're all the way at 129.6. That's $3 move. Was there any breaking down. Was there any weakness? I don't see any there. Ask yourself. That's the 1 hour chart. Let's look at the 15. 15, we had a little weakness this morning. But look at the 4 simple moving average on the 15. Look at that. Let me highlight it. Look at that. Do you see any deviation in the 4 to the negative side? I don't. Let's look at so this is the 10-minute chart. 10 minutes since this morning when the market opened. No deviation. We have a little bit of stuff going on here, but there was no negative on the SMA. That's why the SMAs are more telling than the actual price of the stock. Well, hopefully this opened people's eyes and maybe understand that sometimes candles and all these people talk about resistance and support and resistance and support. What I'm showing you is actually what the trading computers are programmed to look at, which is the simple moving averages. They also have bottom price for liquidity and top price for a move. I mean, there's several factors, but the people that program it have to define price aggregation over time, and that's how they control how fast the stock moves and how far it moves. They have to do this without you knowing it, and they also have to do it without pushing the price up so fast that it becomes unaffordable. And then we have a situation like 1929 where stock price didn't reflect the reality of the value of the company, and eventually people said, I'm out. And when everybody does that, that's the end of that price point, and it doesn't stop until the people stop selling stock. We're looking at a 15-minute Berkshire Hathaway. So there's a bunch of buying this morning. Obviously, this was institutional buying. On the 10-minute chart, you have a steady, 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 steady. There is no deviation in that line. Can humans create the illusion like that? Let's look at the 5-minute chart. Let's get there. All right. So it's impossible for day traders, for people at home, to create this kind of move, because it's going to take millions and millions of dollars in a controlled fashion where the price is staying above the 2 simple moving average every close. Oh, it's running away. What happens? Let's do a correction. They corrected it to the 4. This is a buy point. Happened at 10 o'clock. So people were saying maybe they turned the buying computers off, get a verification on a 2-minute chart, make sure it keeps running. And then it finally had exhaustion. But even when it exhausted, if you were in, it was not a bunch of selling. There wasn't a bunch of profit taking. A little bit of profit taking. But since this is up 2%, what's the chances of it going down? Really slim. Really slim. A lot of people, day trading, oh, wow, it moved 2%. It's going to come down. And some stocks have done that, but never never bet the farm on that, and just keep it short leash if you intend to short it when you have that kind of a move. So this is the same chart with candles and with just a straight line. Candles, you see the price always opened and closed above the 4. Would you rather play this move or some move where it's bouncing back and forth on the shorter time frames? Here is target, 5-minute chart. What do we see here? Something similar. You see this correction, and for 5 minutes since 10 o'clock, all the way till approximately 11:20, the price closed above the 4 simple moving average every time, every time, every time. See it here also. I like using the 10 and the 15 for trends. And here we have the 15 intersecting. Zoom it in. So it's been going sideways on the 15 for 1 hour. One hour. So this is a place to watch the stock on a shorter time frame, because you had exhaustion, you got away from the 4. This could be a turning point at the 15. You look at the 1 hour. Yeah, the 30-minute is flat. The 1 hour is still up. We got 10 minutes left in the hour. So the past 30 minutes, the price is the same as it was at the beginning of the 30 minutes. So at 11:30, the price was around 129.45. Shorter time frames, there's a lot of noise. Longer time frames give you better trending. All of the rules that you learned to this point are all in play. The only thing I've done is simplified the amount of information you are looking at. So here's 1 hour's worth of trading using candles and using just closing information relative to the 2 SMA. That guy right there and the 4 SMA, which is that guy right there. So what do we see going on? This is the 2-minute chart. This is short-term information. We see the 2 keep straddling the 4, which means there is no direction. As the period from 11:26. So for the past 30 minutes, there's been no selling, no buying. Do you try to play this with a day trade? If you're really fast, you can do it. But there is no movement. You can't even determine which direction it's going to go. You know, indication based on longer time frames, its probability is it's going to go up before it goes down. So shorting it and walking away is definitely not something you want to do. Putting an option put on this, you know, assuming that's going to go down for the day, you just gave away your money because low probability. With these indicators on multiple time frames, you can calculate probability of a move up, down, or sideways. The longer the time frame, the more the influence. If you have, such as on the 30 minute and 15, 30 and 60, the 10 and the 15, they're pretty strong indicators. And now on the 15, we are below the 4. Probability of going down has increased. But how much has it increased? Because if we look at the 30 and the 60, 60 still strong up. I wouldn't bet down on this stock. I would wait for a pullback and see if there's an opportunity to get in, but I would not say this is going down until that 1 hour. The 1 hour is right here. Until this changes, that's strong. 1 hour is a strong move. And if we look back at the 2-minute, three-minute, the 5-minute, 10-15, seeing a pattern here? We're up on every time frame from the previous time frame, except for quarter and year. But we're trying to turn that around, so that's not even part of our decision-making process. And how do we know it's turning around? Because if you look at the weekly, right here, and how far is the week? 124.09 is really far. Right here, it's really far from the 4. And what is that? It's like a rubber band. It's trying to snap back. And we got above the 2. Is it going to run there completely? No guarantee. The longer time frames are saying no. You can see the monthlies down. Look at the months between April of 20, which was COVID, all the way to July of 21. Could have bought, stayed, and wrote it up $150. Do you see any month where the closing price was below the 4 simple moving average? See a pattern? Now, there could be 1 week it dropped below, but what are you playing? You playing the year? You're playing the year, you worry about the months. You're playing the months, you worry about the week. Playing the week, you worry about the day and the 4 hour. If the longer time frame is your target, you look at the previous shorter time frame and make a decision based on what you see there. Let's go back to the 2 minute and see what's happening. We are still going sideways. So they're trying to push it up. You can see the volatility with the candle, and you cannot see that with just my line, but you see the opening and closing price getting tighter and tighter. You saw period just below where it went up, it went down. They tried to push it even further. And that was a gap, that actually gapped up. Well, it could have been on 1 minute. So this is probably going to test the downside. Say it's still, there's no indication. The 1 hour is still hour up. 30 minute is still flat. 15 minute is still flat. I would not play this until the 15 or the 30 followed in with the shorter time frames. And since the 30 minute is still at the 2 simple moving average, right there, what indication do you have from that chart that the price is going down? None. Here's the 1 hour. Do you have any indication the price is going down? None. And the 15. Do you have any indication the
12
price
p.m.
is going down? It's neutral. Look at the 10 minute. 10 minutes is a good indicator on direction and follow through. Look at the 5. Something's going to happen soon. The buyers and sellers now have a stalemate. Let's zoom up a little bit. That is a stalemate. Basically, the opening and closing price is the same for the past 5, 10, 15, 20, 25, 30, 35 minutes. It's 12 o'clock. I usually never make any entry point until 10 seconds to 5 seconds before or after. Time is key. Knowing what time is key for successful trading, because when things happen matter. What I'm doing here on the shorter time frames all reflects back to the longer time frames for long-term investing. A few weeks ago, I told a friend of mine, Disney's something to watch, and I'm going to show you why Disney was something to watch. It had nothing to do with Jim Cramer yelling on CNBC or any of the other pundits. This is the Disney stock price, yearly and quarterly. All right, so you look at here. This is 2020, 2021, 2022, and 2023. Pathetic, hardly moved. And look where the end of the year ended up, right on the 2 simple moving average. I am going to change my charts. So, see. Now you can see it on the quarter. So that's the end of year right there. 2023, let's end of 2023. Let's do it on the quarter. Right there. Easier to do. So what happens? The quarter bottoms out, right? The year started going up. And then the quarter hits the 2. All right. And then it tries to, okay, I'm going to take off. Everything's cool. I'm going to be here. And if you look at a monthly chart, monthly chart. See, we peaked out there. We peaked out there, and you can see the week went through, and then we had months down. 1, 2, 3, 4, 5, 6. All these months down. And then go back to the quarterly chart. We came back down, got below here, and then I started looking at the weekly charts, and I said, this might run. I didn't know. I mean, it's one to watch, one to keep an eye on, and if you want to play the bottom, you can see the weekly here. Took off. So you had a month, open the same, both months. Where did it fall? Above. This month here fell above the 4 at the 2. What's the next move? Boom, boom, came down. Look at here. Look at the weekly. It started bouncing around the weekly. Week up, week down, week up, week down, and then I'm going to zoom in here. Look what happens. Look how the 2, the stock price, and the 4 start dancing. Look at here, when all 3 became the same price. Now you want to see what's the next move. Next move was up, 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 up. It went up so fast that now it's got to cool down a little bit. But every week, it's above the 2 SMA. What is that telling you? Even though it's not moving, there's no chance, based on what we're seeing, that you should short this thing. Because a lot of people say, oh, this move, oh, wow, we're going to short it. It's going to go back down because it's cyclical. There's no indication that it's going down. Let's look at the daily. Now, if you bought in down here at $90.50, you know, how long are you in for? You know, that's the question. You know, magnitude is $181 based on yearly charts. And if we look at yearly chart now, we're above the 4. End of year's coming up. So what does that mean? What happens January 1st? Do we get below the 4 again? So you have to watch it. We're year up, 2 years in a row. There's your daily. Do you see any daily price since the beginning of the month, closing below the 4 simple moving average? Here's the beginning of the month, right? every day closed above the 4 simple moving average. What do you see? Do you see a pattern here maybe? Boom, there's something going on. Can't quite put my finger on it, but a lot of people got out and took profit when stock hit 115. Pulled back, went all the way to 112. But it never passed and closed below the 4 simple moving average. How is that possible unless the computer controls the closing price of each period? That's possible, I would think. Let's look at the shorter time frames for today, see what's going on. So this is a 2, 5 is better. So we had this move from 9:30. We had a jump as soon as the market opened. And then if we look at the price, it's above the 4 until 11 o'clock. When things happen matter. So the 11 o'clock people tried to take it down. When you have a move like this, we're up 1%. When do you get in? You get in when there's a correction and the market goes back up. If you're day trading. And what do you have? You have profit. Even if you went away, you still have profit from, got in at this correction point, 116.85, 116.65. It went to 117.12. It was a high, new high. You got to be careful. But even the sell-off is, it's not a rampant sell-off. It's organized. Look at the way that thing's just straddling each side of the 2 simple moving average. That means, to me, it ain't done. Not finished. I mean, you can see here, we are running interesting. There's the 2. $60.30. Look at that, beautiful. So you can see how 60.30. I always keep a 15-minute chart big to see what the closing price is, to know what's going on. There's a 15 here. You can see it. Top side of the 2 simple moving average, bottom side, top side, bottom, top, at the 4, top, at the 4, at the 4. What is that telling you? Man, this is like, you put that in candles. Can you see that with candles? Look at that. Where's the closing price? The candles are a little confusing because the wicks get lower. So the wicks, look at the body of the candle. The body of the candle is above the 4 on almost every time period. The wicks are volatility. The wicks are people with stop losses that get scared. This is not the control. So the market opened here. People said, oh, because they saw the hammer in the previous 5, I'm out. And they got out, and then there was a big buying here, and they took it up to here, and then the price stayed above because the computers were programmed to take the ask price and aggregate the price over time based on this 5-minute window. I mean, even if we look at the 30-minute, actually it's even clearer on the 30. Look at the 30. It's like from 9:30, it was boom, boom, boom. Do you see a pattern? I see a pattern. Look for patterns. The 4 and the 2 simple moving average on every chart will give you everything you need to know. You don't care about volume. You don't care about anything. The only thing that'll screw you up is news. Because news is an emotional driven trade. Let's look at target again. Let's go on the 5-minute. I like the 5-minute to see what's going on. But the 15 is my friend. Look at the 15. See the volatility, but the opening closing price is pretty close to the same place. This is the 10 and the 15. Change style back to what I like looking at. Give me a hard time. All right. Closing price virtually the same.